A lot of people think Nvidia's earnings have already been fully understood by the market. But the real problem is the market is focused on the wrong thing. If you've been watching Nvidia recently, you probably feel it too. The numbers are still strong. AI demand hasn't stopped, but the stock just doesn't feel as smooth as before. Most of the discussion keeps circling around the same questions. Is growth starting to peak? How long can this keep selling like this? But in this video, I want to make one thing clear first. What the market is really struggling with right now is no longer whether demand exists, but how Nvidia should be priced in the next stage. Hey everyone, welcome back to Deep Dive Stock Earnings. Today we're only talking about Nvidia. You might feel like this stock has been acting strange lately. The earnings weren't bad, AI demand is still there, but the price keeps hesitating and moving sideways. In this video, I'm not talking about short-term trades, and I'm not making predictions. I just want to explain what's actually holding the market back right now, so you don't get dragged around by emotion. Once you hear this, you'll understand where the real focus is. Let's start by getting the facts straight. If you look at the earnings alone, Nvidia is still very strong. Revenue continues to beat expectations. The data center business remains the core driver. AI-related revenue hasn't slowed down, and gross margins are holding at very high levels. The issue is that all of this strength has already become the market's default assumption. So the debate is no longer about whether the results are good or bad. The real question is whether the next phase of growth can be even faster. In other words, the market is asking whether Nvidia's growth model will shift from rapid acceleration to a more structural, steady expansion as customers move from simply grabbing buzz to calculating return on investment. The focus naturally shifts to unit compute cost, system efficiency, and depreciation cycles. Once these questions start showing up, valuation tightens first, long before revenue actually slows down. That's why the stock feels less responsive right now. And that's completely normal. The consolidation you're seeing right now isn't necessarily a bad thing. It looks more like capital is recalculating the math. If growth is no longer accelerating every single quarter, can Nvidia still be priced at the same multiple? When expectations shift from always getting faster to high quality but more mature growth, it actually makes sense for the stock to pause. So instead of asking whether it's time to buy or not, the better question is, what kind of confirmation is the market waiting for? That's the real key. The real point of disagreement is pricing power. Over the past 2 years, customers were in pure scramble mode. If you could get buzz, you were winning. Now the market is entering an efficiency-driven phase. Customers are starting to focus on performance per watt, interconnect bandwidth, overall system utilization, and long-term total cost of ownership. Once evaluation shifts from speed to cost, the imagination around margins naturally gets compressed. Even if orders are still growing, what the market is reacting to in advance is this change in the valuation model, not the current quarter's data. That's why positive news no longer leads to instant vertical moves. Instead, you see more range-bound trading and rotation. What investors are waiting for is proof in future guidance that Nvidia can continue scaling while still protecting unit-level profitability. Once that gets confirmed, the market will feel more comfortable expanding the valuation again. Until then, it keeps moving. A lot of people interpret this slower price action as the market losing confidence, but a more accurate way to see it is that the market is waiting for evidence. If the next piece of evidence shows up, price can move very quickly. But before that, capital would rather move sideways than chase at elevated levels. What really matters isn't day-to-day price movement. It's the moment when expectations finally get confirmed. So don't get shaken by intraday volatility, and don't get impulsive because of one green candle. Stick to discipline. If I had to summarize what really matters next in one sentence, it's not sentiment or hype, it's growth cadence. The market is reassessing whether data center revenue can continue expanding steadily on a high base, whether profit structure can hold up as scale increases, and whether orders become more durable and diversified as demand shifts from training toward inference. If these questions receive reasonably clear answers, the market will naturally accept a more mature but still high-quality growth profile, and the pricing model will stabilize again. That's why the current range-bound action isn't wasted time. It's a process of filtering consensus. Ahead of the next repricing phase, the market is deciding who's willing to pay the cost for confirmation and who's simply betting early on direction. For you, the important thing isn't guessing short-term moves. It's waiting for the gains to be validated. To sum it up, the disagreement around Nvidia right now isn't about whether AI is needed. It's about how growth should be priced. Strong earnings are just the baseline. What really matters next is efficiency, cost structure, and order durability. So don't rush to label this stock as bullish or bearish. Watch the guidance, watch margin structure, and watch how orders evolve. What do you think about Nvidia from here? Let me know in the comments. I'll see you in the next one. And don't forget to subscribe and hit like.